and welcome to this tutorial on candlestick analysis. And in this tutorial we'll be talking about the various bullish and bearish single candles, but we'll also cover the various constellations that these candles can form, namely double and triple candlestick formations. We'll also talk about the psychology behind these candles and candlestick formations, because if we can really tune in to the investor sentiment behind these candles, we can really learn to navigate the market profitably. By now, I'm sure you've realized that the candlestick signals that we're seeing on the chart are investor sentiment in graphic form. And when you think about it, candlestick analysis is a very sophisticated trading system. After all, candlesticks have been the result of iterative honing and perfecting of countless observations made by Japanese rice traders over 400 years ago. So it's been 400 years of trial and error and investor observations that led to the creation of all these different candles that we're seeing on the chart today. So 400 years of trial and error, 400 years worth of knowledge have given us around 60 candlestick formations. But in this tutorial, I'll be talking about the major ones. There's about a dozen major reversal candlesticks, and we'll be talking about these later on. The Morningstar is basically a bearish move followed by a doji or a spinning top, whatever you'd like to call it. Let me zoom in actually over here. Followed by a strong bullish move to the upside. So of course this is a reversal candle. I really like how we see a curling up in price action. We see a sort of cupping in price action, and it's one of the most noticeable reversal patterns out there when it comes to candlestick formations. I really like this one, and I actually demonstrate this curling up price action, this cupping price action on Twitter quite often. And the principal psychology here behind this candlestick formation is that we're seeing quite a lot of sell side action over the past 3 days. Remember, this is the daily time frame, so this is day 1, day 2, and day 3 of selling. So we're seeing quite a lot of sell side action here, but on this day over here, we're seeing that the sellers just don't have that momentum anymore. Everybody's just sold their coins. So the next day isn't showing that much selling action. The selling isn't as strong, which is allowing for bargain hunters to step into the market and regain control and just show that strength and press the market upwards. So this curling up price action, this cupping price action, is showing to us that the selling momentum is slowing and the buy interest is gaining, and the buy momentum is slowly gaining to the upside. So we can see that this is a triple candlestick formation, which is a bearish move followed by indecision. This is where indecision creeps into the minds of the bears, because they're seeing that the momentum just isn't as strong as it was before, and they lose conviction, they lose confidence, and this is where the bulls start to regain strength. This is where the bulls notice that the sell side action isn't as strong. They are more confident in taking control of the market, and they're more confident in buying more coins at this price. One more thing to mention about this spinning top candle is that there is a little bit of buy interest coming in, as well as a little bit of sell interest coming in as well. So we can see that this indecision is giving the market some stability. We're seeing some price strength confirmation at this level following all this selling exhaustion. So it's good to see the stability here, and this is why the buyers start to get interested, because they're seeing that price is stable around this price region, and this is why they get interested. This is why they get a bit more confident at buying at these prices. It takes 3 days for this triple candlestick formation to form: day 1, day 2, and day 3. And when we turn on the volume, it will tell us a psychological story of what's going on. So you can see that the volume over here, the sell volume at this candle over here, as you can see, is quite strong. The sell momentum is quite strong, but as each day passes, we're seeing the lowering volume. We can see that the volume is much lower over here. And on this day over here, we're seeing that there's buy interest coming into the market, and then more buy interest, and then more buy interest. So we're seeing that there is a slowing of sell momentum on these 3 days here, day 1, day 2, and day 3. And on this day, and this day, we're seeing more buy interest come into the market. So this is just a visual representation with the use of volume to just confirm all this psychology that I've been telling you about, to just confirm this psychological story of what's going on with the volume, what's going on with the buyers and the sellers. And this is a pretty cool pattern to spot in candlesticks. So you can see that if you understand the psychology behind these candlestick formations, you can use volume to just confirm your suspicions, just to give you that additional confirmation, because volume is also telling us a psychological story of what's going on between the sellers and the buyers. And the first one we're going to start with is the ascending triangle, which is a more commonly bullish pattern. So the ascending triangle is a more commonly bullish triangle. 60% of the time it breaks to the upside, so definitely the probability skews in favor of an upside trajectory for ascending triangles. Let me just have a look at the triangle. Let's try and spot it on the 1 hour time frame so it's a little bit clearer. So an ascending triangle wrestles with a local resistance, which is a very key resistance from which we can see multiple rejections. So we're seeing a multiple rejection over here, here, and even here for a very short while before price manages to break past it, retest it as a support, and then go to the upside again. So we're seeing that there is also a trend line over here which acts as a support. So this is a support trend line, which we even see later is being retested at this point over here, but we're seeing that it's being retested on a few occasions. There is even a slight fake out over here, but we see that generally we're seeing a respecting of this trend line, and this is ultimately an ascending triangle if we just have a look at it this way. And the way to spot an ascending triangle is just to look at all these lows. If you can have a look at this low over here, let me just copy and paste that, and this low over here, and this one over here, you can see that this low is the lowest one compared to this one, and to this one we're actually seeing higher lows. Can you see that? We can see that this low is the lowest out of all the three, and we're seeing a sort of upward trajectory on the lows forming, and this is what this trend line resembles. It shows us that price is forming higher lows, but at the same time it's also forming higher highs. So we're seeing higher highs form and higher lows form as well. But ultimately, these higher highs are always going to get stopped by this resistance. This is a key resistance that we want price to breach. So at this resistance, we're seeing a lot of strong sell pressure, but people are getting more and more bullish about this coin because we're seeing higher lows. So the people who missed out to buy over here at this low are now buying at a premium. They're willing to pay a little bit more because they saw an uptrend form already. So they're paying at a premium. The people who missed out on this and this over here, they're paying at a premium over here. And you can see that people are paying a premium. They're getting more and more bullish about this coin. So this sell pressure over here isn't going to last any long. The bears that are pressing price down won't be able to beat the bulls who are gaining in strength. Naturally, if we're going to cover the bearish rising wedge, we have to cover the bullish falling wedge, which is the exact opposite. So whenever we see a falling wedge on price, we're seeing price wedge in this sort of way. We're seeing price coiling down to the downside. And the thing with a falling wedge is just to look out for this resistance. This is a downtrending resistance from which, if price breaks up, that's a very good sign because we'll see a continuation of the uptrend. However, we're seeing in this case, as was the case with Bitcoin, we saw a fake out. We saw an unsuccessful retest of this resistance as support, which we actually got later on. So if we just scroll or actually zoom in a bit more, we can see that price was testing this resistance over here and then over here, and then it broke up to the upside. And can you actually see, let me just zoom in a little bit more. Can you see this wick? There is a wick testing this resistance as a support. So it's claiming this resistance as a support before bouncing up to the upside to continue its uptrend. And it's good because we're seeing a recurring theme in the market. We're seeing a recurring theme across all these different patterns. We're seeing a fake out, and we're seeing that resistance has to be breached convincingly with a successful retest of that resistance as a new support, because once we can get that, we'll see an uptrend form afterwards. So you can see that this breakout over here and successful retest of the downtrending resistance was the end of the downtrend. This falling wedge pattern is a bullish one, and we're seeing a confirmation of that over here. And as soon as price broke out, very convincingly, we saw a 225% rally to the upside, which was very impressive. It showed that this was a break of a downtrending resistance, which was very significant from around the 19th of January to around the 19th of March. And this shows a very important thing about higher time frame patterns which yield stronger signals. So let me just have a look at the hourly time frame. Let's have a look if we can find a falling wedge pattern on the hourly time frame, and let's have a look at how this performs. So we're doing a falling wedge over here. This is going to be support, this is going to be as a resistance, and we can see that price is breaking out over here for around a 7 or 8% gain. The same principles hold, because you can see that if we zoom in, there is a successful test of support. So we're seeing that price rallied all the way here in this wick, right? And then price bounced off over here. It closed ultimately above this resistance and reclaimed it as a support before seeing higher growth. And we saw an 8% rally. But if we zoom out, let's have a look. If we zoom out, this pattern is barely even visible in the grander scheme of things. This is an 8% move. This little pattern over here compared to this huge pattern over here just shows to you the strength of signals on higher time frames. If you have a pattern drawn on a higher time frame, these will yield stronger signals. And as you can see over here on this pattern, on this example, lower time frame patterns will yield weaker signals.